Everything that can be invented has been invented. Charles Holland Well, the Commissioner of the United States Patent Office, back in 1899. Who the hell wants to hear actors talk? Harry Warner, back in 1927, when movies started to have sound. An earthquake won't hit me. This is what the majority of people think when it comes to natural catastrophes. Reality, however, has shown that natural catastrophes, particularly earthquakes, they happen without advance warning and with immediate effect. Let's have a quick look into the potential figures involved. We're all talking huge figures these days. Millions is nothing. We're talking billions. Let's just do a quick exercise. How many, just putting these figures, these monetary terms, into something which maybe, where we have a better imagination, maybe. If we talk seconds instead of euros or dollars, 1 million seconds, how many days do you think that would be? Just any idea, just don't calculate it, just from top of your head. 100 days? 1 year. 1 million seconds is between 11 and 12 days. 11 and 12 days. So less than 2 weeks. Now using 1 billion seconds. How many days? 1 billion seconds.
12,000.
10,000 days? Put it in years. How many years? This is 32 years almost. So just have it in mind, because we have it in the news. We're talking Greece, yeah, they need another 100 billion. The difference between 1 million, 11 days and 32 years. And that involves us with the challenges of predicting reinsurance prices, reinsurance entrance probabilities. So the challenge of the insurance industry is to predict future events that have a short return period and events that have a longer return period. But how is it done? Could you change? Oh, okay, I've got here anyway. Forecasting the future has always been the principal function of bookmakers and underwriters. It is because these two have so much in common that insurance textbooks insist of explaining the differences. Bookmakers rely on past events. Fortune tellers need the past to predict the future, and underwriters rely on claims experience to predict the future. Having shown the similarities, you may or may not be pleased to learn that I will concentrate on underwriting skills and modeling challenges rather than predicting the winners of next season's soccer team. Let's have a look into one model in one country. So this should just serve for demonstration purposes. What we can see here, this is, and we learned it in the first speech, the so-called return periods. When insurers, reinsurers, modeling agencies try to predict the probabilities of having individual losses, we're talking return periods. Small ones, 100 years, 200 years, but even the ones that have an entrance probability of 1,000 years. And the earthquake we had back in 2010 in New Zealand, just as an example, that had an entrance probability of more than 1,000 years, but yet it happened. So this is the return period, and this is the probable maximum loss the expected loss amount. I have used 6 models, and it doesn't matter what country it is, it doesn't really matter which peril it covers. It should just show you the differences, and Mr. Thalmeier mentioned, how much confidence do the insurer or the responsible people have into their individual model. All the models, from Model A to Model F, they have valid arguments. We at Munich Re have our own model. We have a strong belief in our model. But when we have a closer look into return periods more frequently bought, 100 years, 200 years, we can see a difference. The cheapest model, 150 years, and the most expensive one, 250 years. Million. Which is the right one? Which is the correct model? Which is the correct assumption? So the challenge for you as the reinsurance manager is, or the CFO, the financial manager, you have to protect the solidity of survival of your company. What would you buy? If you look 200 years, you have the same difference. So we're talking roughly 70% difference. And if we look into the longer return periods, 1,000 years, just in this example, they vary by 100%. So the question is, what should you do? For the insurer, the challenge to buy the right protection. For us as reinsurers, to charge the right price. Based on which model? Because we're all talking return periods, 200, 300, 400 years, very difficult. Another challenge is, what do the insurers expect from the reinsurers to be covered? And here, Mr. Thalmeier, you gave the example. The hailstorm was much more devastating than the earthquake. Some years ago, in the reinsurance contracts, it was called a protection against NatCat, natural catastrophes. When it came to the World Trade Center, some contracts had NatCat protection, some had CAT protection. Can you imagine the difference? Some were paid, others didn't receive anything at all. These days, it's called CAT protection. The model, as I've shown to you, it's available for the principal, for the main peril in one country, which may Romania is earthquake. It may be windstorm in other territories. But the insurers, they expect from their reinsurers to pay losses not only from the modeled peril, but to receive losses for every catastrophe that happened. In Turkey, for example, the last major event was back in 1999. There has been a smaller one back in 2011, the Van earthquake. In the meantime, we had a number of smaller flooding events. Denmark. The core model is European windstorm. Guess what the last major events were that triggered the reinsurance contracts? It was cloudburst, absolutely, on the 2nd of July, back in 2011, if I recall correctly. A significant event. Was that modeled? No price from the model. The insurance companies, obviously, they requested protection. And the year before, there has been some minor losses, again from Denmark. Snow pressure. You would not necessarily expect snow pressure from Denmark. But nonetheless, we see an increasing trend of natural catastrophe claims. What does this mean in respect of the penetration? Does this include the penetration? Not necessarily. It very much depends on the character of a country. In New Zealand, for example, they're very risk averse, so they have a very high penetration. In Japan, despite the fact that it's very prone to natural catastrophes, we don't have a high penetration. Let's have a quick look into one of my countries, which is in the press not only every day, I think every hour, which is the Greek market. The Greek market has a high probability of suffering earthquake losses, and there are particular areas that are more prone to earthquakes than others. The penetration against earthquake is as low as 13% in the Greek market. Last year, there has been an earthquake in one of these lovely islands in the Ionian Sea, on an island called Kefalonia. They had some smaller damages. And what we've done from Munich Re, together with one of our broker colleagues, Carpenter Turner, we've done an analysis. So we've done a representative research on the island. And the outcome was very, very interesting to me. One of the questions was, we asked to the people, do you know you can insure against earthquake? 42% had no clue they can insure against earthquake. 52%, so this is more than half. 73% of the people had no clue about the price. The majority thought it's incredibly expensive, which generally it's not. And what was the most surprising thing to me was when we showed this analysis to the insurance market. They gathered around 100 insurance people around, and we asked the question, who of you, we could do the same thing here, obviously you're not all susceptible to earthquake, who of you has insurance against earthquake? All insurance people, they're all in the risk business. Have a feeling. Only half of them had protection against earthquake insurance, and these were the ones that really know what they're talking about. So what could you do to improve it amongst the ordinary people? Germany, you mentioned the example. Flood insurance is available in the German market. 99% of all property could be insured against flood. However, as low as 32% are only covered. Why is that in Germany? We're very risk-averse. The thing is, and the Germans, I think they were lucky, we had some inundations in the past. They all happened when there were elections. You may think, what does this mean? Where's the link? When a natural catastrophe happens in a year with an election, and I can still see our former Chancellor Schröder going to the eastern parts and say, hey, hang on, wait a minute, everything will be sorted out. So the people don't see any need. They have to buy insurance. Another thing, and that happened last year in Bosnia-Herzegovina, they had a flooding with a return period of more than 120 years, so it was devastated significantly. At the very same time, and I think it's very good for the people because they're poor, they were indemnified with European Union money. More than 43 million euros were raised from the EU to build 4,000 new dwellings and to protect new houses or to offer new houses for 14,000 people. And the mayor of this highly affected country, obviously he was very pleased, said, we're immensely grateful for the timely and generous assistance that the EU has provided through its floods recovery program for rehabilitation of homes. Okay, there was infrastructure and things as well. From a social point of view, brilliant idea. Do you think they were going to buy insurance? If such a scheme exists? Probably not. So what needs to be done to increase the penetration? Raise the awareness. On mortgaged property, I think banks could play a vital role, because in Germany and in many other countries, in Germany when you have a mortgage, the banks, they ask you to insure against fire. In California, the banks ask you to insure against fire. And particularly in California, the highest hazard is earthquake. They've not had a big one for the last 100 years, but it's said to be overdue. So obligatory solutions may help, but even here we learned what is obligatory. The Turkish earthquake pool, recently it signed its 7th million policy. It's an obligatory pool scheme, and we will learn more about that one. The penetration with the 7 million is roughly 41%. which is very good, but still far away from obligatory in the terms as we understand them. Now, what are the challenges if you have a high penetration? Insurance companies then need capacity. And capacity, depending on the market cycle, is expensive. Currently, we're in a type of soft market. So you, as a buyer, if you're a buyer, you can get it reasonably cheap. The challenge still is to get capacity. And the Turkish earthquake pool, with its growing figures, they have a dramatic demand of budgets. And just to give an example, 8.8 on the Richter scale. 220,000 houses were affected, and they had a deductible. And the people started complaining about the deductible. And the supervisory were trying to convince the insurance and reinsurance industry to skip this deductible.
5 minutes.
But I think the deductibles are both vital. And Nicoletta, we had the discussion on the PAID, the Romanian earthquake pool as well, because this is done without a deductible, and Nicoletta will tell you more about that. I'd like to finish just with a view on how important a deductible is. And this shows you the effects. And I'll say important both for the policyholder. He doesn't like it. Obviously, he doesn't like it. But he won't, what he would like less is a higher price. What it shows here, this is the deductible in percentage of the sums insured. And this is the effect you can see. The deductible helps to reduce the losses. So above on the top end, we took earthquake, and we say all affected houses that suffered a loss show a loss of 5% of their sums insured. With a deductible of 1%, this reduces the overall loss amount by 15%. If you bring this up to 2%, which would be here, it would be 20%. So the effect is dramatic. And skipping this deductible could lead to issues in getting adequate capacity from the reinsurance market, but it could also lead to problems to some reinsurers. Okay, the ultimate client is not interested in that one, but deductibles, and I can only recommend sticking to these kind of deductibles. So what are the future trends? I think with the increasing trend, and that was mentioned again, we see more and more nat cats, and hopefully a rising awareness of the public. We will enhance the penetration in the various countries. Governmental support is vital, because without a governmental will, there is no chance of succeeding. Nonetheless, let's keep on moving. Eventually, hopefully we will succeed. Many thanks.